The same machines that kept the price down for a decade will be the ones that drive it to the moon. We are watching the machine turn against its masters. If you look at your screen, you see silver at $67. But try to buy it. Call a dealer. Go to a website. You will find the options market is loaded with call options at the $70 and $75
$70?
As the price inches closer, this means for the banking system. If silver goes to $100, several major financial institutions.
Well, guys, welcome back.
Well, here's the chart. Now I had this squeeze code, this 6345 paper. I've been looking all my life. However, I don't know. They start trying to get you to buy right at the top. So who knows? This is not investment advice. It's a picture of the graph. It's 5:30 on my machine. That make it 7:30 in New York. 12:23. Business is tough. Try following this. The insider position. Now this guy is smart. And on YouTube you can be anything you want. Now I've been following silver when 4 quarters was $1, 1964, 90%. Gap up. Empire Economics. Buku views. 9 hours ago. I wish. But just like him, I could put my face on the left side. But would it work? Could I get away with it on YouTube? Or would it be failure? The only way is to try it. Maybe you'll like it. However, this hits so many points on why the world is tied together and the commodity trade is so important. What commodities do you have? I have hardwood. So I put on my black PJs and went to the office at 3:49 in the morning, 47 degrees. So enrich your life and finances making YouTube. I better check the batteries, 'cause I'll have to film. Well, this might be as easy as it is.
The moment we've been waiting for has arrived. The Asian markets opened just hours ago.
Dang.
The verdict is in. The banks have failed. On Friday, they threw billions of dollars in paper contracts at the market in a desperate attempt to smash the price of silver below the critical 65.
Here we
The
go.
moment we've been waiting for has arrived. The Asian markets opened just hours ago, and the verdict is in. The banks have failed. On Friday, they threw billions of dollars in paper contracts at the market in a desperate attempt to smash the price of silver below the critical $65 level. They needed to break the psychological barrier before the week began. They failed. As the bells rang in Tokyo and Sydney this morning, silver did not crash. Instead, it opened strong, gapping up.
Here we go. The YouTube professor.
The moment we have been waiting for has arrived. The Asian markets opened just hours ago, and the verdict is in. The banks have failed. On Friday,
Business is
they threw
boring.
billions of dollars in paper contracts at the market in a desperate attempt to smash the price of silver below the critical 65 to dollar level. They needed to break the psychological momentum before the week began. They failed. As the bells rang in Tokyo and Sydney this morning, silver did not crash. Instead, it opened strong, gapping up and holding firmly above $67. This is not just a price movement, it is a declaration of war. It signifies that the Friday smash was the last bullet in the chamber of the bullion banks. They are now out of ammunition. The market has called their bluff. We are no longer speculating about a squeeze. We are witnessing the opening shots of a kinetic financial event that will likely end the dominance of the COMEX pricing mechanism forever. To understand why this Monday open is so catastrophic for JP Morgan and the swap dealers, you have to look at their margin. These banks are holding massive short positions, bets that the price will fall. Every penny the price rises above their entry point costs them tens of millions of dollars in collateral. By opening above $67, the market has put these banks in a zone of maximum pain. They are now underwater. Usually they would double down and sell more to force the price lower, but they can't. The liquidity isn't there. If they try to sell more, they risk being overrun by buyers. If they try to buy to cover their losses, they will drive the price to $75 instantly. They are paralyzed. They are trapped in a burning building with no exits. The stability you see on the chart right now is not peace. It is the calm before the margin call. While the banks worry about paper losses, the real economy is waking up to a physical crisis. Elon Musk and the procurement teams at Tesla are watching this open with terror. Tesla doesn't trade paper silver, they consume physical silver. A standard electric vehicle uses up to 50 grams of silver. The new Cybertruck uses even more. With the price holding at record highs and inventory at record lows, tech giants are realizing that the just-in-time delivery model is broken. We are receiving reports of off-market, private deals being struck between tech companies and miners. They are bypassing the COMEX entirely. This shadow demand is removing metal from the market before it even reaches the vaults. When Elon Musk realizes he can't get silver for his solar panels, he won't just buy silver, he might buy the mines. This industrial panic is the fuel that will take us from $70 to $100. The engine driving this squeeze is located 7,000 miles away from Wall Street. The Shanghai Gold Exchange, SGE, opened with a roar. The premium for silver in China has expanded again. This means silver is worth significantly more in Shanghai than it is in New York or London. This creates an irresistible gravitational pull. Every available bar of silver in the West is being loaded onto ships and planes to be sold in the East. This arbitrage is draining the London Bullion Market Association, LBMA vaults at a rate we have never seen before. The West is trying to suppress the price to save the dollar, while the East is using that suppressed price to drain the strategic resources of the West. It is the greatest wealth transfer in history, and it is happening in plain sight. For 20 years, high-frequency trading, HFT algorithms have controlled the price. These computer programs are designed to sell when the price hits a certain resistance level. But today, the algorithms are confused. They are firing sell orders, but the price isn't dropping. This is known as algorithmic failure. And when the AI realizes that selling isn't working, it is programmed to switch sides. It will flip from net short to net long. When this switch happens, likely later today or tomorrow, we will see a buying frenzy that is purely automated. The same machines that kept the price down for a decade will be the ones that drive it to the moon. We are watching the machine turn against its masters. If you look at your screen, you see silver at $67. But try to buy it, call a dealer, go to a website. You will find that the real price is much higher. Premiums are exploding, delays are mounting. This disconnect is the hallmark of a dying currency regime. The paper market, COMEX, claims there is plenty of silver. The physical market says there is none. This divergence cannot last. Eventually, the paper market must break. When it does, the price will not rise gradually. It will reset. We are approaching a moment where the exchange will likely declare force majeure and settle contracts in cash because they simply do not have the metal to deliver. If you are holding a paper contract on Monday morning, you don't own silver, you own a lawsuit. Technically, we are setting up for a gamma squeeze later this week. The options market is loaded with call options at the $70 and $75 strikes.
$70?
As the price inches closer to these levels, the banks who sold these options are legally required to hedge their risk by buying futures. This forced buying acts like a magnet, pulling the price higher. It is a positive feedback loop. The higher it goes, the more they must buy. The more they buy, the higher it goes. Friday's close was the spark. Monday's open is the fuel. $70 is the match. Once we cross that line, the explosion is mathematical and inevitable. The psychology of the market has fundamentally shifted. For years, silver investors were battered and bruised. They sold at the first sign of a rally. But look at the sentiment today. No one is selling. The silver squeeze movement has evolved from a niche internet theory into a global investment thesis. The fear of missing out, FOMO, is beginning to set in. Retail investors who watched Bitcoin go to the moon are looking for the next big thing. They see silver breaking out. They see the banks trapped. When the retail herd arrives, and they're arriving now, the liquidity of the silver market is too small to handle them. It's like trying to push the water of the Niagara Falls through a garden hose. The pressure will burst the pipe. We must speak plainly about what this means for the banking system. If silver goes to $100, several major financial institutions are technically insolvent. Their liabilities on the short side will exceed their Tier 1 capital. This is why they're fighting so hard. This is why the media is silent. They're fighting for their lives. If JP Morgan loses control of silver, the contagion spreads to gold, then to the bond market, and finally to the US dollar itself. Silver is the linchpin. It is the small gear that turns the big gear. By holding the line at $67 this morning, the market is effectively holding a knife to the throat of the banking cartel. This is not just about money, it is about power. The BRICS nations, Brazil, Russia, India, China, South Africa, are actively moving away from the dollar. They are building a new trade settlement system backed by commodities. Silver is a key component of this. By accumulating physical silver, they are bulletproofing their economies against the collapse of the fiat dollar. Monday's strong open confirms that the East is supporting the price. They are putting a floor under the market. They will not let it crash because they own the physical asset. The West is short, the East is long. And in a resource war, the side with the resources always wins. The shortage is moving down the chain. It started at the mines. Then it hit the refiners. Now it is hitting the mints. The US mint is already on allocation. The private mints are backlogged. Soon it will hit the factories. When Samsung cannot get silver paste for their electronics, they will panic. They will bid the price up to whatever is necessary. Industrial demand is price inelastic. This means they have to buy it regardless of the price. They cannot build an iPhone without it. This inelastic demand is the ultimate safety net for silver investors. The price has to go high enough to force people to sell their jewelry just to keep the factories running. That price is not $67, it is likely over $200.
$200!
News today. CNBC is talking about tech stocks. Bloomberg is talking about interest rates. No one is talking about silver hitting an all-time high. This silence is deliberate. They do not want to alert the public. They want to keep you in the dark while the insiders position themselves. But the chart doesn't lie. The volume doesn't lie. The silence of the media is the loudest confirmation that this is the real deal. They only ignore what they fear. And right now they fear a run on silver more than anything else. Traders need to be prepared for the exchange to cheat. If the price gaps to $80 this week, do not be surprised if the COMEX halts trading. They will cite extreme volatility. They will change the margin requirements. They will try to force liquidation. We saw it with nickel. We saw it with the Hunt brothers. But this time is different. This time the physical market is too strong. If they close the paper market, the real trading will move to the street. It will move to Shanghai. It will move to private peer-to-peer networks. Closing the casino won't stop the game. It will just prove that the house is broke. So, what happens next? If we hold $67 through the Monday session, the next resistance is nothing. There is no historical resistance above this level. We are in price discovery mode. The sky is the limit. Technical analysts project a swift move to $75, followed by a consolidation, and then a violent run to $100. At $100, the hysteria kicks in. Oh. That is when your taxi driver starts talking about silver. That is when your grandmother asks how to buy coins. We are not there yet. We are in the smart money phase. The public mania phase is still to come, and that is where the real gains are made. Monday has arrived. The disaster did not happen. The price held. The thesis is confirmed. The squeeze is on. If you are sitting on the sidelines waiting for a tip, you might...
Newsmatic and bullion are two different things, and why you pay a premium of them to have them on your old soul machine. I was there when the Hunt brothers dropped 50% of their silver on the market, and the price dropped from $17.50 to nearly $6.80. I was gonna go buy a '59 Vet with mine, but who knows? Yet to pick the moment. Sex Youth Truth Podcast. like, subscribe, comment. Now that I have your attention, there's a Tuesday warning for a gamma squeeze. He's talking 82. But he has a good thesis. And I'm not even sure if this is the next one.
Might be waiting forever. The train has left the station. The doors are closing. The transfer of wealth is happening right now in real time on the screen in front of you. The banks bet against reality, and reality is winning. Do not let them gaslight you. Do not let them shake you out. Hold your position. Watch the gap and prepare for the ride of a lifetime. The era of cheap silver is officially over.
Hot diggity dog. Like, subscribe, comment.
We're here today
The professor of
for oil and
YouTube.
gas industry to make recreation enhancements around this very popular pond.
We're improving the quality of life for not only our employees and their families, but also our neighbors and surrounding.
Well, we'll download that, and we might be done before sunrise. Dang, I work so hard. Well, we'll download that, and we might be done before sunrise. Dang, I work so hard. A few minutes later, is it any better? Which one would you put on the tube? How about a Christmas picture? Hold that still. How about a Christmas? Oh, damn, old man. Christmas picture. Hold that still. Ooh. Interesting. Woo. Cameraman. While listening to the train to nowhere, man. There it is. Woo! Chug it, 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 chug it. You need an alarm clock? How about the 7 a.m.